Order. Without objection, the Chair is authorized to declare a recess of the committee at any time. This hearing is for the purpose of receiving the Secretary of Treasury's annual report on the state of the international finance system. I now recognize myself for 5 minutes to give an opening statement. Secretary Liu, we welcome you back to the committee. We all hope on the state of the international finance system. We trust your testimony will prove insightful and forthright. I would note on his very first day of office, President Obama declared his administration would be, and I quote, the most open and transparent in history, end quote. The President pledged a, quote, new era and a, quote, unprecedented level of openness across the massive federal government. Regrettably, the American people have instead witnessed what Time magazine recently described as, quote, the most secretive presidency in American history, unquote. An administration that has, quote, censored more documents and delayed or denied access to more government files than ever before, unquote. Again, the source is Time magazine, not Tea Party Monthly, again, Time magazine. From matters surrounding the IRS to Obamacare to Benghazi, this administration has refused to be accountable to the American people and their elected representatives in the United States Congress, a co-equal branch of government enshrined in Article 1 of our Constitution. Too often, the administration has obfuscated answers, delayed answers, or refused to provide answers, a pattern that is seen throughout the administration. To focus a moment on Treasury, the Center for Effective Government released a report card a few weeks ago grading federal agencies on their implementation of the Freedom of Information Act. No agency in what is supposed to be history's, quote, most open and transparent received an A. The Treasury Department received a D, but in fairness to the Secretary, several agencies received an F. This is not a surprise to many of us, since requests for information from this committee unfortunately, are too often ignored or delayed or, Mr. Secretary, produced on the eve of your next appearance. And Mr. Secretary, as you know, we know you are a busy man, but appearances before our committee have proven challenging to schedule. And during the last appearance before our committee, I personally asked you if this administration had ever submitted a balanced budget. Twice, I did not receive an answer. In the last appearance before our committee, Mr. Garrett asked you if the Volcker rule would have a negative impact on the corporate bond market. 3 times you declined to answer that question. Mr. McHenry asked you whether Treasury had ever sought a legal opinion on debt payment prioritization. In that case, you did not answer 4 separate times. Mr. Secretary, when it comes to my questioning, I want to be fair. I would like an answer, be happy to give you a moment to put context, but I would respectfully request, again, that questions that are put to you are answered. Mr. Secretary, with respect to scheduling, we know that you have recently had surgery. We are glad that you are recovering. I think most of us have said that both privately and publicly, and we are certainly not unsympathetic to the havoc that wreaked on your schedule. But I do note that press reports indicate that subsequent to your return to work, you did manage to schedule 2 full days of appearances in Detroit, 2 full days of meetings at the World Bank. Today we are grateful, but we also know that you are only going to schedule 2 hours this month for a statutorily required appearance before our committee, a statutorily required appearance that is now 2 months late and comes on the heels of the last statutory appearance before the committee, which was 9 months late. As we both know, your next statutory appearance is scheduled next month. I would respectfully request that you prioritize the appearance and schedule sufficient time to answer all member questions. Briefly, let me turn to the state of the international finance system. On the important matter of increased taxpayer commitment to the IMF, I feel again the administration was somewhat less than open and transparent. The fact that the IMF is moving forward with a package for the Ukraine without the quota increase would seem to belie the administration's claim that the increase was essential to the IMF's ability to render effective assistance to Ukraine. I'm sure we will hear more from the Secretary on that matter. And as I gaze to my left and my right, looking at the national debt clock spinning out of control, I again wonder about the wisdom of effectively converting an emergency commitment to the IMF to a permanent one. And when I hear of proffered reforms, a robust exceptional access framework appears to be lacking. And it begs the question whether on a go-forward basis the reforms that have been proffered will it lead the IMF to exacerbate or mitigate global bailout mentality? I believe Chairman Campbell will have more to say on this subject in his opening comments and in his questions. Again, Mr. Secretary, we do welcome you back here. We wish you a continued good recovery. We look forward to having you back next month, where we hope you will be able to stay longer and catch up on your schedule. Chair now recognizes the ranking member for 5 minutes for an opening statement. Excuse me, 4 minutes.
Thank you very much, Mr. Chairman. Mr. Secretary, we're delighted to have you here this morning. And I'm very pleased that despite the fact that you have only enjoyed your position for a very short period of time, that the administration continues to be successful in growing this economy. In the last 50 months, as you are indicating, the private sector has created 9.2 million jobs. And we are very pleased because of our oversight responsibilities here. We have worked hard, you have worked hard, and the housing market certainly is improving. We're very pleased about the rise in home prices and, of course, what is happening with our homeowners as we get out from under the loss of wealth that we had been experiencing following the recession. Now we have so many homes that are no longer underwater. However, today, this hearing is supposed to have concerns about what is happening in the international community. So I'd like to move quickly to talk a little bit about the IMF. I had hoped that by this point we would have ratified the IMF quota reforms that modernized the IMF to take account of rapid changes in the global economy. As you are well aware, these reforms were negotiated by the Bush administration and completed in 2010 by President Obama. And despite repeated efforts by this administration to secure their passage, they continue to languish here under the Republican-controlled House. Negotiated in 2008 by the Bush administration and completed in 2010 by President Obama, the reforms would modernize the IMF to take account of rapid changes in the global economy. But despite the benefits these reforms would entail, House Republicans already this year rejected 2 efforts by the administration to attach to larger measures legislative language that would authorize U.S. participation in the reform package. The 2010 agreement would double the IMF's general resources to ensure the emergency lender has enough firepower to respond to crises hitting its members. It would also update the governing structure, how the IMF's voting power is distributed among members, to reflect a global economy in which emerging markets are now major growth drivers, and some European countries have lost their economic might. These reforms are an essential first step to maintain the IMF's legitimacy in a volatile world, but none of this will happen until the U.S. has approved its new quota, which would require a shift in U.S. funds, not new financial commitment. In my view, depriving it of the resources to combat future global market crises would directly undercut the U.S. national interest. Growth remains below potential in most regions, including in major markets for the U.S., and unemployment in many countries remains at historic highs, with the number of long-term jobless still growing. If these crises are not solved soon, an entire generation could be blighted. Global stability is ultimately nurtured through trust in international institutions that resolve issues through cooperation rather than economic or political dominance. Should the IMF reforms continue to be delayed, what is at risk is the trust that is key to the stability of the international system. I see that my time has expired, so I would yield back, and thank you very much.
Chair now recognizes the gentleman from California, Mr. Campbell, the chairman of our Monetary Policy and Trade Subcommittee, for 3 minutes.
Thank you, Mr. Chairman, and thank you for coming, Mr. Secretary. As you know, I and the majority of this committee opposed the 2010 agreement that was made by the administration, made almost 4 years ago now. But there's 3 points I want to, you and I have discussed and debated that opposition both publicly and privately. There's 3 points I'd like to make in my 3 minutes about that opposition. Point 1, please don't confuse the opposition to the agreement with opposition to the IMF or the U.S.'s leadership role in the IMF. The IMF serves a very important purpose worldwide for stability of economies around the world and the world economy generally. And the U.S.'s leadership role in it has been important, has been critical, and is a leadership role which we should not abdicate and from which we should not step back. So please understand and don't confuse, just because we don't agree with the agreement that was made 4 years ago, doesn't mean that we're against the U.S. involvement in, leadership of, or the mission of the IMF. We are not. That being said, here's what we don't agree with. We don't believe that the IMF, in order to achieve that mission, needs any more taxpayer money. Now, I know your belief is, and I'm sure you'll say in your opening remarks, that it's not additional taxpayer money because it's already been put in an account, the NAB account with the IMF. I get that. But we can rescind that. That's not a permanent commitment at this point. In fact, we can introduce a bill tomorrow to rescind about $60 billion of that and bring that money back. And that's what I think we ought to do, is we ought to be bringing that money back because the IMF has over $200 billion in forward lending authority. It does not need any additional U.S. taxpayer funds to accomplish its mission and accomplish its role. Third, the reforms in the agreement, 2010 agreement, are a step forward. They're positive. No disagreement there. But they don't go far enough. Even with those reforms, and consider that they were made 4 years ago. We've had the Euro crisis since then. There's been a lot of change in the world, the Ukrainian issue, all these other changes that have happened just in these last 4 years. Even after those reforms, the IMF is still too Eurocentric and still does not have enough controls to make sure that we're not encouraging countries to take on too much debt because the IMF will take care of it at some point later. There are more, it's not that the reforms in the 2010 agreement go too far, it's that they don't go far enough. What we believe we need is more reforms and less U.S. taxpayer dollar to assure our leadership in and the role of the IMF in the future. I look forward to talking more on our questions. Thank you.
Chair now recognizes the gentleman from Minnesota, Mr. Ellison, for 1 minute.
Thank you, Chairman Hensarling and Ranking Member Waters, and also welcome Secretary Lew back to the committee. I regret that I have to leave early today. A dear friend of mine and this whole country has went to his reward, and so I'm going to go attend Congressman Oberstar's services. But I just wanted to say that I'm committed to preserving and expanding the remittances lifeline to Somalia. I want to continue to enlist Treasury Department in seeking solutions to improve the lives of all people abroad who rely on remittances from our country. And together, I think we can make Somalia and other countries a stronger nation, a more secure nation, and a better partner for the United States by improving the flow of remittances and providing technical assistance to help Somalia set up a world-class banking system that will withstand scrutiny and can push away terrorist financing. So on Tuesday, we passed the Money Remittances Improvement Act. That's great. And the language of the bill granted authority of the Treasury saw it. And so thank you. That's all I have today. Very well.
Time of the gentleman has expired. The chair now recognizes the gentleman from Missouri, Mr. Clay, the ranking member of the Monetary Policy and Trade Subcommittee, for 3 minutes.
Thank you, Mr. Chairman. Thank you, Secretary Lew, for your attendance today. The IMF was created post-World War II at the Bretton Woods Conference. The goal of the IMF is to create a cooperative and institutional framework for the global economy that would facilitate international trade and balance global economic stability and growth. The Bretton Woods Act requires congressional authorization to change the U.S. quota of shares in the fund or for the U.S. to vote to amend the Articles of Agreement of the IMF or the World Bank. Thus, Congress has veto power over major decisions of both institutions. In regards to voting power, the U.S. is the only country able to unilaterally veto major IMF decisions. Recently, Congress passed the Ukraine bill, which provides close to $1 billion in guarantees and imposes sanctions on Russia. As stated to you this past December, an earthquake devastated Haiti on January the 13th, 2010, leaving millions homeless. In the wake of the disaster, the American people and the global community rallied to provide relief to the Haitian people. As the Center for Economic and Policy Research points out in a report, despite billions of dollars pledged to build back a better Haiti, more than 350,000 Haitians remain internally displaced, and it is unclear what sustainable impact our funds have had. Mr. Secretary, can you give members of this committee a progress report? You stated to me in this committee that you would, and as of today, this committee has not received this information. You know, one problem with the IMF, that the IMF faces with the American public, is perception. Most Americans ask, why should the U.S. government spend money on the IMF after looking at the current situation in Haiti? Most Americans believe if the U.S. government, through the IMF, cannot get it right in Haiti, which is a few hundred miles from the coast of Florida, how can they get it right in Ukraine, which is on the other side of the world? Mr. Secretary, I'm looking for answers, and hopefully you can provide them with, today. We wrote you and inquired about this in December and have not heard back from you, so I'm looking for your response. Thank you very much. What's that? I yield back, Mr. Chair.
The gentleman yields back. Today, we do welcome the Honorable Jack Lew, Secretary of the Treasury, to our committee today. He has previously, as you know, testified before our committee, so I believe he needs no further introduction. Without objection, Secretary Lew's written statement will be included in the record. Mr. Secretary, I would request that you give a brief presentation orally of your written testimony, given the limitation of your scheduling. Again, Mr. Secretary, welcome. You are recognized for your statement now. I think you need to get...
Ranking Member Waters, members of the committee, thank you for the opportunity to testify today. I appreciate your cooperation in rescheduling this hearing, and will keep my opening remarks brief to permit maximum time for questions. Because of the grit and determination of the American people, the United States economy has experienced nearly 5 years of growth. Our businesses have created 9.2 million jobs over the last 50 months. Our deficits have also been cut by more than half. Still, we need to keep our focus on actions that can help accelerate growth, create jobs, and expand opportunity, as last week's advanced report of GDP showed. One of the most cost-effective ways to confront our economic challenges is with our investments in the international financial institutions. These institutions, which include the International Monetary Fund and the multilateral development banks, promote a more stable global economy while also protecting our national security and advancing our values and interests around the world. Now, the World Bank and other multilateral development banks are critical to our economy, and the testimony I submitted lays out in detail how they help unlock export markets, foster opportunities for American businesses, and create jobs in the United States. Yet given the heightened attention on Europe right now, I'm going to use the remainder of my time to talk about what's happening in Ukraine and the significance of the International Monetary Fund. I know everyone here wants to do everything possible to address the crisis in Ukraine, and we've taken significant steps unilaterally and with our international partners to promote stability, especially with the Ukrainian elections happening later this month. As part of our response, we've coordinated a global effort to impose serious economic costs on Russia and hold accountable those who have violated Ukraine's sovereignty and territorial integrity. As President Putin has admitted, our sanctions have caused additional damage to Russia's already weak economy. Consider that the ruble has fallen to near all-time lows, Russian stocks this year have dropped significantly, and investors are fleeing Russian markets. The IMF forecasts that $100 billion in investment will exit Russia this year, and Russia has already slipped into recession. At the same time, Russian companies are finding it harder to get capital, and Russia's credit rating was recently downgraded to just above junk status. Our strategy has been to move in a systematic and targeted way, and we urge Russia to pursue a diplomatic solution to the situation. Should Russia continue its unlawful and provocative acts, we have a range of tools at our disposal, including sanctions that would target companies in certain important sectors of the Russian economy. Now, as we stand with the Ukrainian people during this critical time, it's essential that Congress pass the 2010 IMF quota reforms. The $1 billion in loan guarantees that we're providing Ukraine is an important step, but our bilateral assistance, while important, is not enough. The IMF approved a very important assistance program for Ukraine just last week, and only the IMF has the capacity to provide the full sweep of financial and technical support that Ukraine requires and will continue to require for the foreseeable future. The IMF is the world's first responder in a crisis of this kind and is the one institution with a proven track record of helping countries like Ukraine implement market-based restructuring and restore growth. Prominent business leaders, members of Congress, and former senior administration officials of both parties have affirmed that passage of the 2010 IMF quota reforms is critical to the United States. Blocking these reforms threatens our leadership position in the IMF and undermines our international credibility. Passing them, though, is a win-win for the United States. These reforms do not require us to commit $1 new to the IMF, and they will allow us to maintain our strong influence within this institution. At this time of geopolitical uncertainty, it's critical that we continue to demonstrate our longstanding bipartisan commitment to American leadership in the world and the important role that the IMF plays in containing economic crises. With that, let me thank you for the opportunity to appear before you today, and I look forward to answering your questions.
Thank you, Mr. Secretary. I want to start off my line of questioning. I'm sorry, the chair yields himself 5 minutes. I want to start off my line of questioning dealing with FSOC and its interaction with the G20's Financial Stability Board. There is bipartisan concern about the, if you will, the who, what, where, when, and why of designating non-bank financial institutions as systemically important financial institutions, which, as you know, can have huge not just domestic, but global implications for the financial system and the economy. So the Treasury is one of the members of the G20's Financial Stability Board, which has designated at least 3 U.S. insurance companies now as global SIFIs, MetLife, Prudential, AIG, correct?
That's great.
And as part of that process, did Treasury approve of that global SIFI designation?
Mr. Chairman, I think it's important to put the FSB and FSOC responsibilities in context.
Mr. Secretary, again, I'm happy to give you time to give the context, but could we get the answer first and then the context? Well, sometimes I fear I get the context, I don't get the answer.
Mr. Chairman, the FSB is a group that acts by consensus, and it does not make rules for any of the national governments. Each of our national authorities makes our own rules, and only the FSOC can designate with the effect of that designation having real meaning in terms of what happens afterward.
Well, allow me to ask it this way then. Did Treasury consent in the designations?
Mr. Chairman, the process is a consensual process. Every country has its own ability to make its own decisions for itself.
I understand that, Mr. Secretary. So is the answer yes, that Treasury consented, or did Treasury object?
Mr. Chairman, the point I'm trying to make is that the designation that has an effect is the FSOC designation. We have not made a determination with regard to one of the companies.
I understand that.
With regard to others. Any decision that we make will be guided by the process in the FSOC where we consider very carefully all the evidence and ultimately the case made by each firm.
So let me try it one more time. Did Treasury consent or object to the designation by the Financial Stability Board of designating AIG, MetLife, and Prudential as global SIFIs?
Mr. Chairman, it is not a vote. It's a consensus decision made in the FSB.
I sense, Mr. Secretary, we're just not going to see eye to eye on what an answer to a question is.
I think
but let me move on with the limited time that
if I could just make
please,
one other
okay.
point, Mr. Chairman. The process by which these designations are made is one where FSOC goes through very substantial analysis. It is never the case that you start with a decision. You always make a decision based on the analysis of facts, and a firm has the
I
ability
understand
to
that, Mr. Secretary. I'm just trying to figure out what Treasury's decision was, and
Well,
you
we've not
seemingly
made an
won't tell
FSOC
us.
decision.
I guess
we have
de
not made a
facto
decision.
there was consent, but I don't understand why it's so difficult to admit it in open testimony if that's what happened.
The place where Treasury will make a decision on whether or not to designate a firm is in the FSOC.
Okay, well, the question is then, to what extent is FSOC following the lead or the direction of the Financial Stability Board? Since shortly after participating in the Financial Stability Board's proceedings, then FSOC designated at least two of the non-bank insurance companies as SIFIs, correct?
Well, those processes were well underway at FSOC at that point. They were made independent of the decision made at the FSB based on the analysis in...
Well, how are they independent if you've already set through one set of proceedings? So you're saying that one set of proceedings had nothing to do with the other set of proceedings?
Well, the decisions made at the the FSB do not require that a national authority take an action.
No, I understand that, Mr. Secretary.
And what they do, I mean, what I was going to do by putting it in context is in response to the financial crisis, what the FSB has become is a place where an international conversation can take place to try and put model approaches that lead us closer to doing the right thing.
I understand that, Mr. Secretary. Your time is limited and my time is limited at the moment. So let me just end with this statement. There's increasing, again, bipartisan concern about the immense discretionary power that FSOC has and how, frankly, little transparency it has, notwithstanding the actions taken yesterday. Incredible ability to take these non-bank institutions and effectively put them into a bailout position. With very little transparency, with very little indication of the methodology used by which to make these decisions and adjudications. As you well know, we will have you back next month. We will have another hearing next month on this process. I would simply call upon you as head of FSOC to cease and desist with these designations until all our questions can be answered fully and Congress can exercise its oversight authority over this incredible process. Well, with that, I yield 5 minutes to the ranking member.
Mr. Chairman, if I may, on the question of FSOC, which we will have more of an opportunity to discuss, I think it's important to know the statute set it up for a purpose, and FSOC is carrying out a statutory responsibility, and it does it with great care and a process that I think has great integrity.
And very little transparency. 5 minutes to the ranking member.
Thank you very much. Mr. Secretary, I really want to talk about two things here. First of all, in your testimony, you did hit on a point that many of us here on our side of the aisle are particularly concerned about. Specifically, you noted that despite the growth in corporate profits and all-time highs in the stock market, the poor and the middle class continue to struggle to make ends meet. Could you expand a bit on your role in promoting opportunities for entrepreneurship and small business? What is Treasury's role in promoting ladders of opportunity? And what can Congress do to help you to be more effective in that mission? And in answering that question, could you talk a little bit about the Small Business Access to Capital Act I've co-sponsored that with Gary Peters. This would help to create opportunities for small businesses by granting them access to capital they need to grow their businesses. I know there's some activity over in the Treasury. Could you help me out a little bit on that?
Congressman, we obviously worry at large about the state of the economy because growth in the economy has everything to do with how small businesses and middle-class families will do. But with specific regard to small business, there are a number of programs at Treasury that I think have been enormously helpful, and they range from the New Markets Tax Credit to the CDFI programs, to the state's small business investment initiative. I think if you look at these programs, and when I was in Detroit, I got a chance to see each of these programs, the results that we were having. It was very important to actually see what's happening with these programs. There's the SSBCI program. There's a parts manufacturing plant in Detroit which is making factory replacement parts for U.S. auto manufacturers. Those parts would not be manufactured in the United States probably if there had not been the assistance from SSBCI to get the kind of financing necessary to take a plant that would have been a vacant and property that was an eyesore and turn it into 200 local jobs. So I think the act that you're describing, that you've co-sponsored, would reauthorize SSBCI. We would look forward to working with you and the Congress to finding a path towards continuing to invest in economic growth that's generated by small businesses in urban and rural areas.
I'm very appreciative of that, and I will be in contact with you about the new markets tax credits. I think there needs to be a little reform there. We have so many of the bigger organizations or companies or businesses that are having the advantage of the program, but we have a lot of other community organizations that want to get more involved, so we'll talk about that more. This gives me an opportunity now to talk about servicing. I understand that the Financial Stability Oversight Council's annual report, which came out yesterday, identified mortgage servicing, in particular non-bank mortgage servicing, as an emerging issue that we should all be paying close attention to. On the issue of non-bank services, the report notes that mortgage servicing rights are increasingly being transferred to these companies, while the CFPB servicing rules apply to these companies. With regard to consumer protection, many of these companies are not subject to prudential standards such as capital, liquidity, or risk management. Now, I'm paying attention to this because in the subprime meltdown and doing loan modifications, I learned an awful lot about the servicers. I learned that many of them were not well trained. I learned that many of them were involved in ways that they could benefit from having second liens themselves, on and on and on. So we're worried about this. Can you tell us what you know, what you understand about these services, and should we be paying attention to this report that just came out?
Congressman, the reason that we highlighted it in the FSOC annual report is it's an area that we think warrants more attention. The CFPB plays a very important role in terms of the consumer protection aspect of it, but as unregulated entities, the questions that you pointed to in terms of capital, liquidity, and servicing capacity are very important. Our mortgage system only works well when payments are made and credited properly and the system flows. If that function were to break down in any way, it would wreak havoc with the mortgage system. So we didn't put it in the report because we think that it is today a burning crisis. We put it in because the job of FSOC is to look ahead at what are the problems that could emerge. And this is one of the areas which we think warrants additional attention. I think it's one of the real sensible things about FSOC, which is it's not made to ask what happened in the last crisis, but what are the things we should be worrying about as we look forward.
Thank you. Servicing is an extremely important issue. Thank you.
Time of the gentlelady has expired. Chair now recognizes the gentleman from California, the chairman of our Monetary Policy Trade Subcommittee, Mr. Campbell, for 5 minutes.
Thank you, Mr. Chairman. Back to international affairs, if we may. Let's start at the point of agreement. IMF is important. U.S.'s leadership in it is important. Agreed?
I think we agree on that.
Okay.
I hope we agree on that.
All right. Very good. So we got that. So let's get to the matter of the two places where we disagree. One being, the first being the matter of how much capital the IMF needs to perform their function, and how much additional U.S. taxpayer money. Now, if I can put this in some perspective for you, one of the things that we will all be struggling with later this summer is, and the administration as well, is the bankruptcy or lack of cash running out of the transportation fund. So, and we could bring this money back. I understand it's scored as an investment, so if we, and I understand $100 billion went in there in 2009. We can't get all $100 billion back because some of that money has been permanently deployed. But we can get 50 or 60 or so back, and it would score at something, which arguably we could use to help with this rather difficult situation that we're facing this summer. Are you open to discussing something different than the agreement that was made in 2010 in terms of the U.S.'s financial commitment to the IMF, or additional financial commitment?
Congressman, I don't think we get to unilaterally decide to reopen the 2010 agreement. The 2010 agreement is an international agreement. If we walk away from it, it falls apart and there is no agreement. So it leaves the IMF in a place where it has no ability to address the reform issues or to recapitalize the quota system. I actually don't agree with your characterization of there being sufficient resources in the IMF if you were to withdraw the new arrangement to borrow monies. Right now, the way the IMF is planning to deal with a crisis, were a crisis to develop, would be to use both the quota and the NAB. We saw in 2008, 2009 how quickly resources get called into play. So I actually don't think that if we and other countries withdrew from the new arrangements to borrow, and the quota reform is not enacted, that the IMF would be properly funded to deal with a crisis. So I think that's a fundamental difference in terms of what the need is.
And on your second point, that's a legitimate disagreement. I mean, you don't know. Nobody can know for sure how much more they might need or what crisis might recur. And of course, the IMF is not the only international entity. It's not the only one supporting Ukraine. It's not the only one out there that's available. So granted, that's simply a disagreement as to whether additional U.S. taxpayer money is, given all the limitations we have on that these days, is best deployed in that way. To your first point that you made, though, I mean, I agree. If we walk away from the 2010 deal, it falls apart and there is no deal. But we can make a new deal, can't we?
So the 2010 agreement was worked on for many years between two administrations. It reflected a compromise where the United States maintained its position and Europe essentially gave up share so emerging markets could have a growing share. It preserved our veto power and our leadership role in the institution. I think it's a good deal for the United States. I think it's a good deal for the IMF. I think opening it up creates an enormous amount of uncertainty. And I actually think the point you just made about there are other institutions, I don't think there is another institution. There is no other institution that could have provided almost $18 billion of support for Ukraine in the time that the IMF did. And that will be the foundation for Ukraine having an economically viable future and a politically stable future.
My only point is that the EU came in with money, we came in with money
directly.
But
it's all built on the IMF.
There were other. Oh no, I'm not disagreeing with it. I'm just saying that it doesn't have to be 100% of all that goes in there. Going back to the reforms, because I've got less than a minute here. Do you agree with me or with us up here that ideally we would like those reforms to go farther than they did?
You know, I think that the world, you made the point in your opening remarks that the world's changed since 2010. I hear that from a lot of countries in the world who say that since 2010 they have issues they would like to address. The problem is if you were to go back and address those issues now, I don't know that it would get resolved in a way that is as constructive as 2010. It would take a very long time. And the 2010 agreement is a good step. I
hate to cut you off, but just in my last 10 seconds, I'd just like to leave you with this thought. We've been at odds on this thing. We don't have to be at odds. I think it would be more constructive if we had conversation rather than just throw things at each other over a wall.
I agree with that, and you and I have had good conversations in private on this. I've talked to dozens of members of the House and Senate on this. I will and will continue to make myself available for those conversations anytime.
Time of the gentleman has expired. Chair now recognizes the gentleman from Missouri, Mr. Clay, the ranking member of the Monetary Policy Trade Subcommittee.
Thank you, Mr. Chairman. And Mr. Secretary, I have just received a letter from Assistant Secretary Fitzpaine in response to our inquiry. The letter is dated April the 9th, and I'm just seeing it. But I have noticed that the U.S. contribution of $120 million to the Haiti Reconstruction Fund, and that deals with housing, reconstruction, rubble removal, and education. Do you have anything else you can update us on as far as progress?
Congressman, we did respond, as you noted. I'd be happy to go back and get a more detailed response. I think the history of providing assistance in Haiti has been very challenging, not just in response this round, but in previous rounds. It is something that we have put an awful lot of effort into trying to make sure that the assistance we provide, and that's provided through international financial institutions, builds a foundation for a sustainable future for Haiti. But Haiti is a very, very difficult challenge. I think it's hard to compare countries. Haiti has a lot of unique characteristics. We very much want that money to be used well and to leave Haiti with a stable future. We look forward to working with you to go through the analysis of that.
Thank you so much. Let's shift to Ukraine. There is a perception that quite a few of our European partners rely on imports of fuel and natural gas from Russia. Talk about the effectiveness of strategy by targeting the inner circle of billionaires close to Vladimir Putin, and what kind of impact that has had.
Congressman, our strategy from the start has been to make clear that we were going to take decisive action. It would be action that they felt, and that it would be indicative of our willingness to go further down that path should we need to. The sanctions that we've put in place have targeted people in the Russian government, some of the largest business executives in Russia, a bank that is the bank that many of these people who are close to the president of Russia bank at. And it has gotten their attention. I think that we see many indications that they are very concerned about the sanctions, that it is hurting their economy. The thing about sanctions that I always say, regardless of country, is sanctions do not change the policies of another country. Sanctions create an environment where leaders understand the consequences, that if they fail to change their policies, their country is going to be hurt. And I think that we've succeeded in that, and part of the reason we've succeeded is the resolve we've shown. The President has put in place an executive order that makes very clear that we have more tools at our disposal. I think our cooperation with the European allies is very important. If we act alone in the world, it doesn't have the same effect. If we sanction a company and somebody from another country comes in and does business with it, then that's backfilling the activity that we have shut down. So it's very important to cooperate on international lines. We are working with the G7, with our European allies, and I do it with my counterparts at the finance minister level. The President does it with leaders. The Secretary of State does it with foreign ministers. I think we're making progress. I think the meetings that the President and Chancellor Merkel had last Friday reflected that, as did their public statements.
About the $1 billion loan guarantee agreement, how will the loan guarantee help return Ukraine to a path of economic recovery?
Well, the package that the IMF put in place, which, as you know, is close to $18 billion, is going to create challenges in the Ukrainian economy. It's going to raise gas prices. It's going to result in a weaker exchange rate. The burden needs to be borne by those who can afford to bear it, and the $1 billion loan guarantee in large part will be used to make sure that those who really can't bear the burden have some recourse. As a matter of preserving political stability, that's very important. It's one thing to tell a company that can use gas more efficiently that it's going to be paying more for gas. It's another thing to tell families to shut off the heat in a cold winter. So I think our loan guarantee is a very important piece that fits in. And the IMF is sometimes in a position where it imposes conditions that are quite difficult. The loan guarantee is meant to put some real funding behind easing some of the burden on the most vulnerable people in Ukraine.
Thank you, Mr. Secretary, for your response. Mr. Chairman, I yield back.
Chair now recognizes the gentlelady from West Virginia, the chair of the Financial Institutions Subcommittee, Ms. Capito, for 5 minutes.
Thank you, Mr. Chairman, and thank you, Mr. Secretary, for returning to the committee. You might recall the last time you were here in December, the two of us had a brief conversation about the guidance on the financing of coal plants by MDBs, and today I have some specific questions about the guidance. Mr. Upton and Mr. Whitfield wrote to you to gather additional background information about how the guidance was developed, and I would like to ask unanimous consent to insert the letter to Secretary Liu from the two representatives into the record.
Without objection.
Yeah, I believe they sent this nearly 5 months ago, and to this date they have not received a response from you. So I have a couple questions. Countries other than the United States provide support for coal-fired powered plants overseas. For instance, China's Export-Import Bank recently made a $1 billion investment in a Serbian coal plant. In many cases, don't you feel that the financing from developing countries or development banks in countries like China simply replace our U.S. financing and cause developing countries to use the Chinese coal technologies and equipment, etc., rather than coal technology made in the United States?
Congresswoman, we obviously have been working with our international partners to fashion an approach to energy in developing countries where we promote resources that will not contribute to the climate problems that we have. We have not made it a uniform approach for the poorest countries. We continue to have an exception for coal facilities.
Have you done that? Have these MDBs participated in the financing of coal plants in the poorer countries, to your knowledge?
I'm not. I actually I would have to check what the approvals have been, but I know our position is that for the very poorest countries, we would support them. I would say that the MDBs have supported some coal projects that we absented ourselves from voting on. You know, for example, in Pakistan. So there have been approval of coal projects. I think the challenge we have, in part, is how do we put technologies in place that are truly sustainable in those environments. It's actually not very likely that many of the poor countries will be buying lots of coal from the United States. That's not where we're not selling a lot of coal to developing countries. I think you asked the question about technologies, and I think that's actually the more relevant issue.
Right.
We have a lot of technologies that we think ought to be in the mix of what they're buying. And we very much would like the mix of technologies to be one that both promotes access of U.S. companies to sell technology, but also clean and sustainable energy resources.
I think the concern is that we're disincenting our American technology to go around the world, and we're requiring CCS and things that are really unattainable, particularly in an economic model. Let me ask you another question in this vein. What other federal agencies did Treasury talk to develop this guidance? Was it EPA? Did you talk to Nettle in Morgantown, West Virginia, where they're doing a lot of the development of these technologies? What kind of other folks weighed in on this?
I mean, there was an interagency discussion. I would have to go back and check what the participation.
Okay, I think that's part of the questions that the two congressmen have asked that I'd like to get an answer to. I'm going to shift gears here quickly. As chair of the banking subcommittee, we have obviously spent a lot of time trying to protect and work with our community banks and credit unions to not put them in this one-size-fits-all. What kind of consideration, when you're going out into the international regulatory arena, are you giving to make sure that we're not bringing regulations from an international regime into our country that has a totally different banking system, that we're asking some folks to change their business models, insurance companies is another example, that really doesn't fit into this model? What can you tell them about that?
Well, you know what,
tell us.
Congressman, what I tell them is that we have taken great care, Congress has taken great care as it's written its laws, and regulators have taken great care as they've implemented them to make sure that they don't have a one-size-fits-all approach, that they treat community banks where appropriate differently, and they've been exempted from many rules and had special provisions put in that reflect their economic realities. I actually make the case in international meetings that I have that we have a banking system that reaches out to all parts of our economy and actually makes capital available in communities to small businesses in a way that they don't. So I use our system as something of an example because is a real problem in Europe, for example, with access to capital by small businesses.
Well, we need to preserve that.
We do.
And I appreciate your comments. Thank you.
Time of the gentlelady has expired. Chair now recognizes the gentlelady from New York, Ms. Maloney, the ranking member of the Capital Markets Subcommittee.
Welcome, Secretary Liu. I want to ask you about the current report on terrorism risk insurance from the President's Working Group on Financial Markets, which you chair. The report found that TRIA has been a resounding success since it was enacted in 2002. It has ensured that terrorism risk insurance is available and has kept prices steady and affordable. But the report also contained some troubling information. It found that, and I quote, "The market currently is tightening in light of uncertainty as to whether TRIA will be renewed." Based on this, would you say that Congress's and this committee's failure to swiftly reauthorize TRIA is actually harming the American economy by driving up insurance prices unnecessarily?
Congresswoman, we strongly support the reauthorization of TRIA, and we think the sooner the better. The market has changed since the 2001 when the attack on the World Trade Center gave rise to the need for a program like this. But it hasn't completely healed, and I think it's a real problem if there's not an extension of TRIA, and in our largest, most populated areas, institutions start having challenges getting terrorism insurance. At the time when it was put into effect, I had firsthand knowledge of what it meant to try to get terrorism insurance. I worked as chief operating officer for New York's largest employer, and we didn't have access to private insurance at the time. It was very scary. So I think it's important that we have to work together on this. We have to do it in a way that reflects the changes in the market, and I think the sooner we have that conversation to work on a bipartisan way to get it enacted, the better.
Well, as we all know, and I'm sure you know too, that it's very rare that Congress passes a bill that does exactly what it's supposed to do and doesn't cost the taxpayers 1 cent. But that's exactly what happened with the passage of TRIA, and it's been successful for over a decade. So my question is, based on the report from the President's Working Group, do you think it's wise to make any dramatic changes in TRIA?
Yeah, Congressman, I think that reauthorizing it is critically important, and we should look at whether or not changes can be agreed to that are appropriate, but reauthorizing it is the critical issue. And we've made clear we want to work together on that.
Well, does the private market have the capacity to step in if the government exits the terrorism risk insurance market?
I think, as our report indicated, we don't think that the private market would be able to fully meet the needs, and there would be an issue of the price. It's obviously not exactly the same situation we had in 2001, but the need is still there, and that's why reauthorization is so important.
And obviously, if, God forbid, we have another attack, the government will respond and be as helpful as possible. Wouldn't you say that it makes all the sense in the world to have this framework in place in the event that you do have it?
Yeah, I think it is better to anticipate and insure against risks than it is to just wait until something happens, and then there's no one other than the government who can step in.
Well, do you think increasing the trigger for that government backstop in TRIA will force small and medium-sized insurers out of the market entirely, ultimately increasing the cost to government?
Yeah, the question of the trigger is one that I would be happy to look at in detail. Obviously the existing program has worked well. Whether or not there's any room there is something that I would have to examine.
And in terms of the reauthorization, do you think that reauthorizing the program for 3 years will provide enough certainty for the markets? Most of us have supported legislation for 5 years or 10 years. What do you think about the idea of just 3 years for the TRIA reauthorization?
In general, you hear from the business community, certainty is just critical to their comfort in making investment decisions. So I think more certainty is better than less, but reauthorization is better than expiration. So it's a conversation that I think we all ought to have.
Thank you for your testimony.
Gentlelady yields back. Chair now recognizes the gentleman from New Jersey, Mr. Garrett, the chairman of the Capital Markets Subcommittee.
Thanks. I didn't hear the chairman's full timing. You're here today for about 2 hours, is that correct?
That's correct.
Yes, and did I hear, are you scheduled to be with us next week?
Well, our offices are working on finding...
But are you scheduled here like next week?
I think our offices are working on finding a time that's meaningful.
All right. I was hoping that I could get a no so I could lay the foundation that I can actually get a yes and a no answer out of you, but even on a simple question like that, I guess I can't. So let's go on to the substance.
I don't believe next week is one of the options, but...
Right. Let's go on to the substance. FSB, in their press release, says that they made the designations that the chairman talked about in consultation with IASIS and national authorities. Yes or no question, are you the national authority that they consulted with?
Well, there are a number of U.S. representatives on the FSB.
And are you the national authority that they consulted with on this issue?
I'm trying to answer your question. There are multiple U.S. authorities.
Who are they?
It is the Federal Reserve Board and the SEC. Yeah, the Federal Reserve Board and the SEC.
So when they did say that they did this in consultation, and your word was there was a consensus, was there a vote taken by all the authorities, U.S. authorities?
I mean, typically the FSB is not a body that votes. So that's why, I mean, when a body acts by consensus, it usually votes.
When a body works by consensus, it says, has the people in the room and says, let's see where everybody stands on it. So did the U.S. authorities all agree with this position? Did they say where they, did you indicate where you felt on this position?
Look, I expressed my views on these matters in FSOC meetings.
Well, I'm asking here, so did you give your position on this, and did each of the other U.S. authorities give their position on the insurers? That's a yes or no question.
Congressman, it's not really a yes or no question because
you did not give your give your opinion?
Yeah, we have representatives who participate in the FSB.
I understand that. Did you give your opinion?
The process that
Did you give your opinion? I want a yes or no.
I'm trying to answer your question, Congressman.
Would you please give me a yes or no? You said you could tell us how many hours you're going to be here. Can you tell me whether you gave your opinion on whether these should be globally?
Congress, I expressed my views on these matters in the
So the answer is yes.
I have never relinquished my ability to make decisions to anybody other than
Thank you. So the answer is yes, you gave. Did the other U.S. authorities give their opinion?
You'll have to ask the other authorities.
So was it the consensus of the U.S. authorities? That means, did they agree? Did you agree that this was the correct decision by the FSB?
Congressman, I understand you're trying to ask yes or no questions, but to maybe answer your question, if you just give me the ability to give you a few cents.
I would love to do that in writing or in meetings, but you know that you have not returned my phone calls and you would not have agreed to a meeting with me. So I'm doing it here. Are you the national authority on the areas dealing with asset management? Would you be the authority in that area, or would that be the SEC?
Congressman,
Yes.
FSOC is now looking at questions, regarding asset management. The regulatory body that has principal regulatory jurisdiction over asset managers is, in many cases, the SEC, but there are aspects of it regulated by other agencies as well.
So would they be the authority that would be responsible in this manner?
So the U.S. regulatory bodies do not make their decisions in an international group.
So who does? If they don't, who does?
The FSB is not making U.S. policy. It is.
I'm asking you a simple question. As far as the decisions at FSB that the U.S. regulators are present at, that you've already identified, will you be the authority in this area? Will you, all three of you, have to agree? Will the SEC have the authority to make this decision? Who makes these decisions? If we don't know, then maybe we should have legislation directing to this, if you can't give us a yes or no answer.
I would be happy to speak to you about how the FSB works and the important function it plays.
Would you be happy to also give us the criteria that the FSB and FSOC uses in their criteria decision making as well?
The FSOC has worked in a very systematic way.
Would you be willing to give us the criteria by FSB and by FSOC? That's a yes or no question.
FSOC has published, on its website a lot of information about designations made.
They have a lot of information.
Yeah.
They have not indicated what their criteria is.
Well,
so would you be willing to say here and now that for both FSB and for FSOC that you would identify specifically what the criteria is? And if not, why not?
Congressman, we have indicated the basis for our judgments in FSOC where we've made designations, as I've said a number of times, the FSB...
Would you be willing to allow members of Congress to appear and attend these FSOC meetings in closed meetings?
So, yeah, that's a separate question.
It's the next question. Yeah. Very good.
I have 1 second. I'm happy to answer
as much
your
time as the chairman. Would you allow members of Congress to come into closed meetings? If not, why not?
Brief answer, if possible.
The FSOC process is one that balances carefully the important issues of transparency with the need to deal with issues that are regulatory matters where proprietary and confidential information and supervisory information is discussed. We've worked very hard to create a way of balancing that, and I look forward to working with you on.
Was that a yes or a no?
I don't think open FSOC meetings are the
time of the gentleman has expired. Chair now recognizes the gentlelady from New York, Ms. Velasquez, for 5 minutes.
Thank you, Mr. Chairman, and welcome, Mr. Secretary. U.S. participation in the IMF advances many of our interests overseas, notably developing foreign markets for small business exports. Can you please elaborate on how our continued support of the IMF helps our economy and small businesses create jobs? And I do not want a yes or no answer.
Thank you. Well, Congresswoman, if you look at where the demand in the world is, it's mostly outside of the United States. Europe is our largest export market. At a time when the IMF stepped in during the financial crisis to make sure that Europe didn't just continue to just careen into a depression, that meant that there would be demand for U.S. products. Yeah. And it's not one-to-one. You can't say that if the economy avoids depression, business X, Y, or Z gets a certain amount of business. But we know in the aggregate, U.S. exports are higher, and small businesses are a big part of that. So I think that the U.S. has both economic and national security reasons that the IMF is just of critical importance. And our leadership in the world is very much compromised when we don't keep our commitments like the 2010 reforms, or we make it a situation where the world is looking at the U.S. as the obstacle to moving into a more secure place.
Thank you.
Just in the case of Ukraine, we pushed very hard for the kind of package that the IMF ended up putting in place. I'm proud of the fact that we succeeded, but I can tell you it was harder because we're the one country that's standing in the way of the IMF reforms.
Thank you. Mr. Secretary, the U.S. continues to negotiate with its 11 partners on terms of the Trans-Pacific Partnership Trade Agreement. As you know, the administration has been less than forthcoming with specifics of the agreement. Can you elaborate today on how this trade agreement will benefit U.S. small and medium-sized exporters?
Congresswoman, Ambassador Froman has been up for many meetings on the Hill, and I've been up for many meetings on the Hill. We look forward to continuing to consult with Congress. Obviously, I have relatively narrow areas of responsibility, the financial sector, and USTR has the broad responsibilities. I would just point to the meetings that the President had just a few days ago in Japan, and it underscores the importance to the U.S. economy. The President was insisting that one of the things that has to happen with TPP is that Japan has to open its auto and agriculture sectors to imports. While there wasn't a final agreement, I think there was progress made there that is laying the way for an agreement which will open important markets. Overall, I think the U.S. has a great interest in being part of the growing Pacific economy, and it would not serve U.S. interests if we didn't have a high-quality agreement where we got to sell our goods.
Would you, can we trust that there will be safeguards in place so that small and medium-sized businesses will not be put at a disadvantage?
Well, the theory behind TPP was a new approach to trade agreements. It was to say we're going to set a high level, and only countries that are willing to abide by high standards can be part of it. So if we can get a high standards agreement, I think it will help across the board with the U.S. Exports, and that will help small businesses.
Thank you. After we experienced our own financial crisis in 2008, this government took drastic action to stabilize the system, stimulate the economy, and enact strong new financial reforms. But some have argued that these measures have placed U.S. companies at a competitive disadvantage. With our economy now in strengthening recovery, can we now say that the U.S. firms actually have an advantage over foreign competitors as a result of our efforts?
I think that if you look at the U.S. recovery, it has been stronger and deeper and longer than recoveries in other places because we responded with clarity and decisiveness, both in terms of our fiscal policy and in terms of financial reform. I'm proud of the fact that we're leaders in driving the world towards higher standards so that we don't have a crisis like that again. And it's important that we cooperate in international bodies where we don't relinquish our decision-making, but what we do is we try to drive the world to a higher standard overall so that we're not out there alone with high standards. Frankly, this is not a world where you can have your own high standards and be safe if you don't have high standards around the world.
Thank you.
Time of the gentlelady has expired. Chair now recognizes the gentleman from Texas, Mr. Nagelbauer, Chairman of our Housing and Insurance Subcommittee.
Secretary Lew, thank you for being here today. As you know, Mr. Secretary, in the President's 2015 budget proposal, it had a section on Terrorism Risk Insurance Act, or TRIA. In that proposed section, it stated that the administration was committed to implementing reforms to limit taxpayers' exposure, achieve cost neutrality. It also went on to say that it would work to identify appropriate adjustments that would achieve a full transition to the private sector. And then finally, the section offered suggested reforms to be increasing the program trigger and the industry copay. Mr. Secretary, is that pretty much the administration's current position on TRIA?
Well, as I was saying just a few moments ago, our position is TRIA needs to be reauthorized, and we look forward to working with Congress on a bipartisan basis to reauthorize it in a way that is effective.
So, Mr. Secretary, did you not have any input into the President's budget proposal under the TRIA section, since TRIA falls under your...
No, I have tried to indicate an openness to looking at either straight reauthorization
Mr. Secretary,
or working on
the question is,
agreeable.
Did Treasury write that part of the... I know that all of the agencies, pull together, and as the President puts the budget together, but that comment should have originated from Treasury, since, you oversee TRIA, right?
The provisions in the budget reflect the administration view. The report that we issued...
So the administration's view then is
our
that you think we should move to, and I quote again, transition to the private sector, and that some of the suggested reforms are to change the program trigger and the copay. That would be the administration's position.
And any specific decisions we would make on provisions would have to be connected to our most current analysis of what the market conditions are and the impact is. The report that we just recently issued indicates that the market is not ready to step in and do this without an ongoing extension of TRIA.
But transitioning to the private sector was a part, and I quote, achieve a full transition to the private sector. That's Treasury's position.
But I don't recall the time frame. I don't know that there was a time frame in there.
Well, it says transition, and so but you would support transition to the private sector over a period of time.
But the question of could we not have TRIA and have access to insurance? We do not believe that right now the market is such that without TRIA there would be adequate access to this insurance.
But maybe changing the program triggers and the copay would be one way to transition to that?
And I'm happy to discuss specific issues, but I don't think any of the language you read suggests specific positions based on the current conditions of the market.
Well, when was this written? What do you know now that you didn't know then?
Well, the report that was just issued just about a week or two ago is the most current analysis, and we would look forward to working on a bipartisan basis to reauthorizing TRIA and we'd be open to ideas that are consistent with the policy that we've set forth. But not having a reauthorization or having a reauthorization that doesn't permit market access would be a bad thing.
I want to go back to another issue that some of my colleagues have been talking about, but in a little bit different perspective. I know that they've been talking about the Financial Stability Board's role in your interaction and maybe the Fed's interaction on the designation of GCs. But as you also know, that the Financial Stability Board has directed the International Association of Insurance Supervisors, IAS, to come up with capital standards for internationally active insurers, and this would impact about 40 of our domestic companies. I think the real question that we have here, and the reason, Mr. Secretary, that you're getting a lot of questions here is I think there's a lot of concern both from members of Congress and the industry that who is representing the U.S. interest at the table. And if you acquiesce and say you support some of the things that this Financial Stability Board is proposing, and some of these international agencies begin to adopt these standards, it could impact the competitiveness of U.S. companies. And I think what we want to hear is that you are not saying with a wink and a nod to the Financial Stability Board, hey, we support these ideas. I think a lot of folks are concerned that the U.S. regulatory structure is adequate and that the insurance industry probably did as well as any financial industry during the downturn.
Congressman, I have tried to make clear that any designation of U.S. firms will be made in FSOC by a process that is very thorough and listens carefully to the concerns raised by U.S. firms. I do think there's real benefit to the FSB looking at issues on a global, international basis to have standards where other countries are lifting their standards as well. We have never delegated our ability to be the supervisors of our own firms.
Time the gentleman has expired. Chair now recognizes the gentleman from California, Mr. Sherman, for 5 minutes.
Couple observations. These standards we're negotiating for are published standards. Our Asian competitors are experts in unpublished and sub-rosa obstacles that our small businesses simply can't deal with. And also, as to the IMF developing markets, it's also developing competitors, both good and bad. As to China currency, Mr. Secretary, we've talked about it before. A recent report that China is boasting about shows that on a purchasing power parity basis, China's economy is roughly the size of ours. What that means is that on the standard they're bragging about, their currency is undervalued not by 20 or 30%, but 50%. I know you're working to try to push up their currency. We could identify them as a currency manipulator and impose tariffs. I know that isn't the administration position. But I hope you would take a look at the Chinese boasting that the real measure of the size of their economy, and hence the real measure of their currency, shows a 50% undervaluation. I want to turn your attention to Norwalk, Connecticut. There is the Financial Accounting Standards Board, which is proposing that we capitalize all leases. This will add $2 trillion to the liabilities of American businesses and $2 trillion to the assets as well. This will throw off every ratio between liabilities and owner's equity and is estimated to devastate not only real estate but manufacturing and retail. It cost millions of jobs, $400 billion off of our GDP. I don't think you came here to discuss that, but I do hope usually you would just leave to Norwalk, Connecticut, and the FASB these intricate issues. But when we're talking about trillions of dollars on balance sheets and hundreds of billions of dollars of effect on our economy, I hope that you and your staff would take a look at this FASB proposal.
Happy to take a look at it.
In May and December of last year, you came and said you would be happy to take a look at the California system for worldwide unitary apportionment. Because one of the questions you haven't been asked here is, if a television set is designed in Japan, manufactured in Malaysia, and sold in California, where is the profit earned? And the answer, of course, is the Cayman Islands. We need to go with a new system for calculating what portion of a multinational's income is subject to U.S. tax. I know you promised to look at it then. I can't imagine that you've had the time.
Well, I actually did go back, and my Assistant Secretary for Tax Policy has taken a look at it, and he'd be happy to follow up with you.
Okay, so I'll give him a call, and we'll take it from there, and that's...
And Congressman, if I can
Yeah.
just go back to your characterization about the size of the Chinese economy, I think that just for
I want to squeeze in another question. I've made the point before. Their currency is undervalued. I hope you do even more.
I just want to defend the U.S. economy.
It's a great
Our
economy.
per capita purchasing power and our
Mr.
strength in
Secretary,
the world is number one still.
We're number one. Go America. Next question.
I don't think anyone would trade their economy for ours.
I'm not trading anything for anybody. Go America. And now, you're trying to get us to go along with this IMF change. You've said the IMF being under this new and the existing system, we have a veto over what decisions they make. And I was told often that we had a veto at the World Bank, a very similar institution. And then the World Bank loaned $1.4 billion to Iran. I had a chance just last week to talk to the number 2 at the IMF, a Chinese national, Zoom In. He tells me that no, the United States does not have the kind of veto that would which would allow us to prevent IMF lending to Iran, and that in fact the IMF has an economic team in Tehran now doing the work that would allow the IMF and other international lenders to decide whether to make loans to Iran. Now, I hope that the United States and Europe remain united as to what sanctions to impose on Iran, but I don't know what the policies are going to be. Can you go back to the negotiating table before you come to Congress to negotiate, go back to the negotiating table at the IMF and say, we need to go to Congress and prove to them that we alone can block loans to Iran if that is American policy?
Congressman, the way our veto works at the IMF is that we have a veto over administrative changes in the IMF. We don't have a veto over each decision that's made. Our veto gives us a disproportionate voice at the IMF, and it gives us the ability in almost every case to drive decisions where we want them to go. The reason we need to do the IMF reforms is to maintain...
But if I empower the IMF may empower Tehran.
But if the U.S. doesn't have the strong voice it has, our ability to have the IMF make the decisions that we believe are right is weakened. And that's why IMF reform is so important.
Time of the gentleman has expired. Chair now recognizes the gentleman from New Mexico, Mr. Pierce, for 5 minutes.
Thank you, Mr. Chairman. Thank you, Mr. Secretary, for being here. As a veteran and strong supporter of our military and national security, I was fascinated that you mentioned national security 5 times in your handout to us. But I also note that you specifically reference what you're doing to in Afghanistan and Pakistan. Pakistan and Afghanistan are ranked number 2 and 3 on the global terror index. Both countries are known for harboring and exporting terror. And so is there some explanation you can give why we would be supporting the building of economies in areas that basically are, I think the comments on the web pages for the terrorists say they'd like to annihilate America and annihilate Americans. Any reason that we should be taking that and running with it?
Well, if you're asking why we have U.S. policies to promote a different kind of Afghanistan and Pakistan through our assistance programs, is that?
Yeah, I'm just asking why we're lending money to build economies in terrorist states.
Well, I think we have been involved through 2 administrations or multiple administrations of both parties in trying to make sure that there's not a haven for terrorists to plan attacks on the United States in that part of the world. And our efforts are really aimed at making sure that there is not that kind of a haven, and part of it is making sure that there is an economy that works for people who are
looking at what's going on in Iran and what will happen in Afghanistan.
I think we've proven our will to take the fight to terrorists in Afghanistan and Pakistan.
I think with us pulling our troops out, I think the judge is still out on, and the jury is still out on whether or not that nation will slide into the same sorts of things that we find in Iraq now. So I just find it interesting that at a time when we are cutting our military budget, the President's budget slashed defense spending, and so it looks like maybe they're going to subcontract the the defense of the nation out to the IMF, and I really appreciate you taking that role. When you talk frequently about Ukraine in your report, have you all dealt with the allegations that $20 billion in gold disappeared from the Ukraine, that $37 billion in loans disappeared from the Ukraine, that $70 billion was moved offshore in the last couple of years out of Ukraine, and we're going to go in there and we're going to stabilize situations where that kind of loss of assets is occurring? And so have you all dealt with those allegations?
Well, Congressman, one of the first actions we took when the current situation developed in Ukraine was to take actions to try and stop the movement of monies that was illegally taken out of Ukraine. It is something that we in the international community need to make sure that we do our part on, but there needs to be reform in Ukraine and a different kind of leadership in Ukraine. I think if you look at the interim government, it is trying very hard, and I think being quite effective under very difficult circumstances, trying to not take a different course and not have the kinds of practices that you're describing, which is part of what's created the problem in Ukraine that they're dealing with right now. And it was not entirely a problem of Ukraine's making. There was a lot of influence from Russia over the years.
I'll play that clip to my constituents, but I suspect I will not get a round of approval to vote for people who make $31,000 a year average income in my district to bail out countries. Greece, they refuse to pay the taxes. 40% of the people refuse to pay taxes. And you want people in New Mexico to pay taxes for the people over there who won't pay their own damn taxes? I think that's going to be a hard sell, and I'll play back your answer.
We've never lost a dollar on the IMF, so if you're talking about the IMF,
I'm just talking about situations, and you are here saying that we are the first responders in economic crises around the world, and I'm just telling you that the idea that I'm going to go back and explain to constituents why I would vote for something like that is probably not going to happen.
But Congressman, now, that's an important distinction.
Please, I've got 39. Please, I got 39 seconds.
If
you would please give me my time. I guess my last question is that there appears to be an IMF practice not to lend money into states which are illegally partitioned, divided up, maybe a civil war is going on. Our loans to the Ukraine then seem to give validity to Russia's position in the Crimea. You have a comment on that in 10 seconds?
I think we've made quite clear we think Russia's behavior is illegal and it's not recognized by the United States or the rest of the world.
But there may be a de facto difference in what the practice says. Thank you. I yield back, Mr. Chairman.
Time of the gentleman has expired. The chair now recognizes the gentlelady from New York, Ms. McCarthy, for 5 minutes.
Thank you, Mr. Secretary. Appreciate it. I'm going to give you a moment or two to be able to answer the question, explaining to people back home why the IMF is so, I don't think we spend enough time with our constituents. I have, because the years I've been on the NATO parliamentarians, I see where the money goes, I see what the money does, especially in the smaller nations that need an upper hand. The money does go and help the regular people, like it would be, like, say, for FEMA to help my people back home after Sandy. So it's important to me that we get this passed. I understand that, if we do not live up to our obligations, do you have any idea who might take our place if we don't live up to our obligations?
Well, the first part of your question, it is so important to have an international body that is the first responder when there's an economic crisis. It should not be the United States in every case. In almost every case, it's the IMF. There is no substitute for the IMF. In Ukraine, we put $1 billion loan guarantee on top of an almost $18 billion IMF package.
Right.
Our loan guarantee would not solve the problem, and I can't imagine the United States stepping in to do that job entirely on its own. We've never lost a dollar in the IMF. So what we've done is we've, in the post-World War II world, created an institution where we promote economic stability in a world that promotes U.S. Economic growth because we export to growing countries, and political stability where there wouldn't have been otherwise. So it's incredibly important that the IMF be there. Now, as far as our role in the IMF, there's no doubt the emerging economies have grown, and they want a stronger voice. The 2010 reforms were a step, an important step, towards giving more of that voice to emerging economies. It did not come from the United States. It was really a reallocation from Europe to the emerging economies. Where our veto does come in is we have to agree to changes at the IMF. But it's not a great thing for the leader of the world to be standing, blocking a reform that protects our interests, when many others would say, why doesn't your share go down? Now, while they can't do that to us, they can't impose it on us, our ability to drive decisions where we want them to go in the IMF requires that we be seen as the leader who keeps our word. And, you know, I have no doubt that, you know, China would like to have a larger interest in the IMF. There are a lot of other countries that would like to have a larger say. Preserving our share, making sure that we keep our veto, having the strongest, most powerful voice in the world on these issues is part of what makes us the leader of the world.
I think that when you think about the way you just answered that question, you know, we talk about being the leader, a moral leader, certainly showing the way on, you know, working towards those countries that are looking for democracy. And I, for one, certainly would prefer to see us in the format as far as leadership versus some of the other developing countries. And I think people have to take that into consideration. I am sure that the majority of us here on this committee or in this Congress would not like to see some dictatorship coming from other countries that are emerging. So that is some way that we have to protect it. I think there's a misunderstanding also on the amount of money that goes in and what our share is. But in the end, that is a payment towards leadership. And I think that's extremely important. I'm hoping my colleagues, as they get to understand this issue a little bit better, that we'll be able to get this through as far as up onto the floor and for a vote. We've worked on this for years. The same with the Export-Import Bank. I know that's a little bit on the side, but for this country it's extremely important. And for my constituents and for every little small business to have a part of that only grows our economy, and those are ways that we can go. So with that being said, I thank you for your work. I know a lot of people don't understand it. I would say to my colleagues, not so much to go out on a Codell, but to take trips that are educational and see how this all works in other parts of the world, which the trips are not fun, they're hardworking, and it takes up our time, but it is quite an education. With that, I yield back.
Thank you.
Gentlelady yields back. Chair now recognizes the gentleman from Michigan, Mr. Huizinga, the Vice Chairman of the Monetary Policy and Trade Subcommittee.
Thank you, Mr. Chairman. I appreciate you being here as well today, Mr. Liu. And do you believe that the IAIS should develop global insurance capital standards?
I think that it is important for there to be a global discussion of this because while we have to make decisions for ourselves and every national authority has to make decisions for itself, it is very useful to have an international discussion that drives the conversation to a high standard. I would just point out that in that IAIS process, our insurance experts sit at the table and have a strong voice.
I understand, but should they be the developing? I mean, that's not the place for just conversation. I mean, that is the place where they're developing standards, correct?
Right, but I think it's important. It's more like a model code than it is law,
Okay.
and it leaves each national authority the ability to address issues in their own way.
So, and I understand this might be in the bailiwick of the USTR, but would you support then financial services being a part of the TTIP conversations?
No, I think it's important for financial services to be in the channels that they're in, where I think they are discussed in an effective way in international settings. We have been driving the discussion over the last number of years.
So I'm sorry, though, is that a yes or a no on
TTIP? I do not think that they should be included in TTIP and subject to trade actions, because I think that we each have requirements in our national authorities to do prudential regulation, and our standards have to be based on what it is that maintains the soundness of our financial system.
So even with the Europeans potentially giving ground on some ag issues and some other things, as they've indicated, at least to me and some of my colleagues, It seems to me if the Europeans are interested in discussing financial services, that might be a place we want to go. But so having said that, can you assure me and the committee that any of these new rules that are developed by IAIS will be compatible with our state-based system of regulation?
Well, we do have a state-based system of regulation. Our Federal Insurance Office has taken a look at how to think about this in the future, and it very much reflects the deep tradition we have of state-based regulation. When I'm in international meetings, it is something people don't understand.
Sure.
All over the world. It requires a lot of explanation.
So it sounds like the answer is maybe.
Well, no, we have a system of state-based regulation. We will make decisions in the United States on any changes that come in that, if at all. And it's a tradition that's very important.
All right. Well, I'm sure you're a very smart man, very well read, so I assume that you are well aware of in recent months Federal Reserve Chair Yellen, Governor Tarullo, and others have stated that insurance companies, quote, have unique business models, I think was the phrase that was used in this committee, that make them very different from banks, and that bank-centric regulatory model really isn't going to work for a lot of these insurance companies. And coming from Michigan, we are the domicile of a couple of different Canadian insurance companies that are they're very recognized and well known, not even necessarily physically based, but the entry point is Michigan. And it seems to me when we're talking Canada and U.S., largest trading partners in the world, we're not dealing with the problems that caused economic downfall here. And so I think there's a lot of concern by a number of us as how we are going to be dealing with these rules. And I understand you don't want to answer the question of what the position of Treasury is advocating at the FSB to promote these state-based systems. I mean, at least that's what I've heard, and my colleague from Texas, the chairman, and a number of others have tried to take a run at that. You don't want to answer whether you are advocating or not advocating. You're just saying you're a part of the process of review. But there's a lot of us looking for some assurance that we're not going to throw the baby out with the bathwater here.
Yeah, I think that the question of designating the largest and most systemically significant institutions, we've only made a few decisions to apply that designation. There aren't a lot of firms that would meet the threshold test. Even.
But then why would these just apply to international players? What's not going to make you say, well, let's apply these standards to large domestics?
I think if you look at the process that FSOC has gone through, we're not going to be applying it to all insurance companies in the United States. It's only companies that present systemic risk. And I think it is important, as Chairman Yellen said, that they be regulated in a way that reflects the realities of their business model. And I know the regulators are looking at ways to do that.
Time of the gentleman has expired. Chair recognizes the gentleman from New York, Mr. Meeks, ranking member of the National Institutions Subcommittee.
Thank you, Mr. Chairman. Hi, Mr. Secretary. I hope you recall not too long ago we had a conversation at the White House regarding minority inclusion. I later followed up with a letter to your office asking for greater minority-owned business and professionals be included in the Treasury's recently announced program to issue new floating rate notes. Since then, the Association of Securities Professionals, which is a premier trade association for minorities and women in the financial services industry, has brought to my attention that the Pension Benefit Guaranty Corporation and several other federal pension funds are not contracting any minority and women-owned firms for asset management, brokerage, and other financial services. A lot of the members sitting here today authored section, led by the ranking member, authored Section 342 of the Dodd-Frank Act on minority inclusion, and we frankly have yet to see its implementation at a level that meets many of our expectations. And so I was wondering if you could offer us any evidence or facts that point to the contrary.
Well, I think the record at Treasury, and if you look at the TARP program, has been one where there has been substantial progress made on the representation of women and minority-owned businesses, and it's something we take very seriously and we work very hard on. The floating rate auction is handled like all other auctions are. It's developed internally. The product is developed internally within Treasury, and it's handled through the primary dealers. So it's not. It's really not a program where we have contracts that we're putting out. But where we do contracts, where there are those issues, we take these issues very seriously, and I'm happy to look at the issue you're raising with regard to BBGC.
Yeah, because I need you, because what it seems as though, you know, and here's the whole idea, is to make sure there's lots of dollars that's being there, and it seems that it's going to certain segments and others are being left out. And the opportunity, at least, to participate in the system is not there. And so I would love to, whether to have further dialogue. I think this is very important, and maybe we need to go through the process again as to what it is and how some of these firms could, they want to compete with anyone else. They're not asking for anything special, but they want to make sure the door of opportunity is there. And that is why we noticed when we went through all of this previously, Section 342 was very important to us. And so I would love to have another follow-up discussion in that regard and see what we can do there.
Happy to.
Let me then also ask the OCC, the FDIC, and NUCA, NCUA, and the Federal Reserve all recently testified before this committee, and they all have established permanent and high-level offices in their organizations that specifically deal with small and community financial institutions. They further testified that they all agreed that it was good practice to have such functional and policy-making separations between big institutions and community financial institutions. The U.S. Treasury sets a broad financial and economic policies for the entire financial industry. Community bankers have long complained about a lack of voice at the U.S. Treasury and how one-size-fits-all financial policies and regulations have been detrimental to their business model. So it just seems to me, wouldn't it make sense to have a separate office and or senior official at the Treasury that handles specifically small or community financial institutions?
Congressman, let me start by agreeing that the concerns of small banks, small businesses, have to be treated very seriously and incorporated into any decision we make that affects their interests. I think our record shows that we've done that by action as we've gone through various decisions that we've made. I'm not sure that having a separate silo for smaller firms actually helps accomplish that goal. There's a risk that decisions start getting isolated from each other and you don't see the potential impact. So I'm happy to look at the idea, but to me the important question is, as each decision is made, are those kinds of questions being asked and answered? And I would worry a little bit that by creating a place where people worry about that and suggesting that it's not everyone's responsibility, you could end up with less, not more impact. But I'm happy to look at it.
Okay, and lastly, you know, the House is voting today on the Electrify Africa Act. And we now have nominees, new nominees, in fact, at the World Bank and the African Development Bank who will be instrumental in pushing the initiative forward as they view these very important development institutions. What can the U.S. Treasury do to ensure that this initiative is successful and that American firms, and particularly minority firms, can participate in the Electrify America Act?
Time of the gentleman is regrettably expired. An exceedingly brief answer, Mr. Secretary.
Congressman, I'm happy to look at the proposal. I would just say that Power Africa is a very important initiative that the President has announced and that we're working on in conjunction with other agencies, and I would be happy to follow up.
Chair now recognizes the gentleman from North Carolina, Mr. McHenry, the chairman of our Oversight and Investigations Subcommittee.
Good morning.
Morning.
Are you having a good day?
I'm having a fine day. I hope you are too.
Yes, I am. Thank you. Are you a member of the FSOC?
I'm the chair.
Okay. So that is that a yes?
Yes.
Oh, good. You've actually said yes or no today. This is excellent. So we just want to start off on that basis that we've had, you know, two nice exchanges here. So I want to ask you about the non-bank SIFI designation process, right? And as a member of the FSOC and as the chair, as you just said, do you meet with firms that are to be designated or contemplated to be designated?
The way the process is set up, the initial stages are done using public information, but as it proceeds into a stage where it's being considered for decision, there is contact with the companies to get information. And after a preliminary judgment is made, the firm has the ability to meet with the entire council.
The entire FSOC voting members?
One firm, Prudential, availed itself of that opportunity, and the entire FSOC met with them.
Is that before or after the notice of proposed designation?
It's after the proposed designation, but before an action has been taken.
Before the action's been taken.
Correct.
But the FSOC votes to propose the designation, then the firm is able to, in essence, appeal and come before you.
Right, but they're having extensive contact with the people preparing the record.
Are those your deputies, or is that some lower level?
It is either the deputies or the technical staff.
So in this whole process, do you ever meet with these firms that are potentially designated?
Well, I just described how we meet with them.
Okay, so that then explain this to me. So you only meet with the firms as a full group after you've proposed a designation that they're SIFIs.
I mean, is
that correct?
There is.
Is that correct?
As a member of FSOC, that is where I've met with them. Yes, but there's extensive contact with the firms before that point.
Are voting members meeting with firms to be designated?
Only after the proposed designation.
Okay, thank you. So why is that the case? Can you cite a rule or regulation on why you only meet with them after you've proposed their designation as a SIFI?
We have laid out a procedure that we work through in an orderly way, where a record is established, where it's the early stages. The goal is not to have there be any kind of a notion that there's market sensitive. These are market sensitive processes. So there's reaching out creates a different situation than not reaching out. So there's a desire to first look at all the public information before you even take the step of reaching out.
Right.
But before a designation is made, there's extensive contact.
You only meet with them after you make a market moving designation with a proposed SIFI designation. You only meet with these firms afterwards. As a voting member, you've already testified that's the case.
In stage 3, where the record is put together for the FSOC to make a judgment, there is extensive back and forth with the company, and that is preparing a record that goes to the voting members. And after a proposed designation is made, which is all confidential. There's nothing public in that process. The firm has the opportunity to meet with the council.
Okay. So let me move on. You sent a letter yesterday stating that what you said in front of the your testimony in front of the Senate was incorrect. You said if the debt limit were not raised, and assuming Treasury had sufficient cash on hand, the New York Fed's system would technologically be capable of continuing to make principal and interest payments from Treasury, counter what you testified. And I appreciate you correcting the record. So my question is, if the Fed is able to make principal and interest payments, why is your assertion that credit markets would freeze still correct?
Congressman, I stand by everything I've said about the debt limit, including at that hearing.
You were saying that you were incorrect at the hearing in this letter.
No, that's not what the letter says, and I'm happy to answer your question. I only have 10 seconds.
Go for it.
A little bit more time. It would be helpful.
Please, Mr. Secretary.
There is no way to pick and choose what payments you make of the federal government without defaulting. So even if you have a technical ability to write a check to pay interest and principal, then you're not paying Social Security or veterans payments or contractor payments. And if you don't extend the debt limit, you end up with the government of the United States for the first time in its history defaulting. Nobody should want to do that. The question I was responding to yesterday was just a technical question, and the letter speaks for itself.
Time of the gentleman has expired. Chair now recognizes the gentleman from Massachusetts, Mr. Lynch.
Thank you, Mr. Chairman, and thank you, Mr. Secretary, for helping the committee with its work. I'll be in Ukraine again next week, and last time I was there, I heard considerable complaints about what was perceived as our weakness in terms of economic sanctions against Russia. So I know that the results have been mixed at best, but I do know that between the Federal Reserve and Treasury, we maintain currency exchange reserves that allow parties who engage in international trade to convert their rubles, for example, into dollars. And I think one of the most impactful things we could do, I think if we really wanted to get Russia's attention, would be to restrict the ability of those businesses in Russia to convert their rubles into dollars. And I think if the EU, if the European Central Bank did the same thing, I think it would send a very strong message to the Russians that from a financial position we completely disapprove of what their activities are in Crimea and in eastern Ukraine. Is this something that you've thought about or Treasury has considered in terms of a sanction? Because these individual sanctions on the oligarchs are not getting us there, and unless we're not really serious, this is something that we should be thinking about.
Congressman, I think we have been very clear that we have additional steps we can take. The President has issued an executive order that gives me the authority to designate sectors in the Russian economy. We have been taking steps which I believe have had an impact. They're clearly being felt by Russia. The goal of these sanctions is for President Putin to change his policy. It's for there to be a way out of this through a diplomatic resolution. And we hope we don't need to take additional steps, but we've made clear we have additional steps.
The impact seems to be very, very narrow. It is on the oligarchs, but Putin's popularity for what he's doing is still very, very high. He's still got the support of the Russian people because the impact is not being felt on them, and they're not seeing the consequences they're not feeling the consequences of his actions. What I'm saying is that if we restrict the currency exchange for the ruble, I think it would have a detrimental effect on the value of the ruble, the liquidity, and if the Europeans did the same thing, we could really send a very strong, an extremely strong message to Putin and to the Russian people that this is not behavior that we condone.
I don't think that there's any doubt on the part of the Russian leadership that we have additional steps we could take that will increase the amount of pain it causes to the Russian economy. And I think the expectation of that has had an effect on their judgments, but obviously not the effect to correct the situation. We are going to continue at this. We've made it clear it's unacceptable. We've made it clear it's not the goal of sanctions to cause pain to the Russian people. It's to change the policy of the Russian government. I think the Russian economy is weak. It has gotten weaker, and people are beginning to feel it. And whatever popularity there was around the initial moves in Crimea, the pain is only going to get worse and worse if they don't.
All right, I'm going to have to reclaim my time. Look, the European Bank for Reconstruction and Development this is basically the only international financial institution that has a specific mandate to work in countries, and this is a quote from their Enabling Act, those countries committed to and applying the principles of multi-party democracy, pluralism, and market economics, close quote. Oddly enough, the United States has 10% of the voting power within the European Bank for Reconstruction and Development, and yet they're doing business in Russia. And do you really think that that's consistent with our participation in that program to support what Putin is doing by continuing to invest in Russia through the European Bank for Reconstruction and Development?
Since this current situation has developed, there have not been loans to entities that are connected to the Russian government. There were a couple of loans made to firms that had no connection to the policies, but as the situation on the ground changes, it's one of the many things that we're going to keep our eye on as to whether the policy there also should change. we would not support loans that would support the Russian government.
I hope so. All right. Thank you. Thank you, Mr. Secretary. I yield back.
Time of the gentleman has expired. Speaking of time, the time that the Secretary has agreed to spend this morning, the Chair intends to call on 3 more members, Mr. Royce, Mr. Green, Mr. Mulvaney. The Chair now recognizes the gentleman from California, Mr. Royce, Chairman of the House Foreign Affairs Committee.
Thank you, Mr. Chairman. I appreciate it. Mr. Secretary, as you know, the Fed, Treasury, through the FIO, the NAIC, all are engaged with the IAIS over the development of international capital standards for certain insurers. And I am somewhat troubled to hear that IAIS is likely to propose that the capital standards be applicable to more than just systemically important firms. In other words, they're going to extend that to internationally active insurance groups. I think it's been noted today that Treasury also sits on the Financial Stability Board, which engaged the IAIS and oversees that institution through this process. And as a threshold matter, I'm very concerned to hear stakeholders talk to me about the lack of coordination among U.S. representatives engaged in IAIS. Unlike some of my colleagues, I do think there should be a strong federal role in coordination. So my question is this: how can we ensure that our participants in this process speak with a uniform voice and ensure that we support insurance-centric standards so that U.S. companies who operate around the globe are not disadvantaged here at home or in other countries?
Congressman, I'm not aware of a difference amongst the U.S. participants in terms of the principle you just stated, that there be insurance-centric standards if standards are applied. The IAIS has participants who have deep expertise in the U.S. insurance industry, including the state regulatory process. So I think it's important that our participation there is very well informed, and it is informed not just on the substance, but in the tradition of state regulation in the United States.
Well, I understand, Mr. Secretary, but the reason for the question is we had a hearing here which vetted and where we heard about those differences of opinion, and so that's why I raised it. But let me point out another point, and that is the FSB is also actively looking at designating non-bank companies as global SIFIs. A few months ago, the FSB proposed a $100 billion threshold for designating investment funds as GSIFIs. How was such an arbitrary number set? That was my first question. And to be fair, I'm suspicious of the $50 billion threshold for U.S. banks as well. It is not a risk-based assessment. In this case, it appears that this $100 billion threshold, and here's the point, it exclusively captures only U.S. funds. At $100 billion, that's what it does. No foreign funds currently meet that threshold. So why would you support global designation criteria that only impact U.S. funds and put them at a disadvantage compared to their foreign competitors? And why support arbitrary thresholds at all?
The only designation that would result in regulation would be a national authority designation, which would have to be made in the United States by FSOC. And I just want to point out that our review in this area has not concluded that designation is the right option. We don't know that there are other ways that the issue might be addressed, and it might not need any further action. So we have not made a judgment in FSOC how to proceed with it. We're in the early stages of doing what FSOC was created to do, which is look ahead at the future challenges and make sure that we're thinking about them in advance.
And from that, I take that in these negotiations you're resisting this designation, which would put U.S. firms at this competitive disadvantage.
What I'm saying is...
I understand it's an ongoing process, but I was just trying to figure out where you actually are in the process.
There is no ambiguity that the decision on U.S. firms will be made in the United States and will be made by FSOC.
Thank you, Mr. Chairman.
Gentleman yields back. The chair now recognizes the gentleman from Texas, Mr. Green, the ranking member of the Oversight and Investigation Subcommittee.
Thank you, Mr. Chairman. I thank the ranking member. Thank the witness for appearing today. Let's, for a moment, talk about a cost-benefit analysis, because as we look at the IMF, the benefit that it accords the world, not just the United States, in my opinion, outweighs the cost. Can you give some brief analysis in terms of cost versus benefit as it relates to the IMF? And if you'd like to, you can direct it toward the United States, but I truly think that the global economy has a better standing because the IMF makes contributions. For example, if there's a bank that is solvent and in a time of crisis it's about to default, the IMF can prevent that from occurring, and that then helps the global economy, which we happen to be a part of.
Congressman, I can't give you a quantitative answer, but I can tell you qualitatively that the U.S. economy and the global economy would be in a much worse place right now if the IMF didn't exist and if the IMF wasn't acting responsibly, both at a moment of crisis like 2008, 2009, and when individual countries face crises. You know, our economic growth in the United States can't be separated from economic growth around the world. As I was saying earlier, most of the demand in the world is not in the United States. Europe, if it were in a free fall through the last 5 years, wouldn't have just been a problem for Europe. It would have been a problem for the United States because we export to the United States and our growth and global growth are interconnected. The fact that the IMF steps in with tough measures, responsible programs are based on countries putting their fiscal house in order and reforming their systems, and it puts the resources behind economic recoveries. And I think that, you know, right now you're seeing one after another country in Europe emerge and go to the market with bond issues. You're seeing around the world in Asia and Latin America countries that are stronger because of the IMF programs. And you're seeing the United States where our economic growth is in significant part tied to our ability to export to those markets. So I can't give you exact numbers. I'd be happy to go and try and put some numbers to it. But it is an enormously important institution, both for the United States and the world.
Thank you. I think you've given a good representation of how it impacts positively the United States and the world economy. Just to give some indication that the IMF is not a liberal institution, is it true that the increases in quota, that 5 of the increases in quota of the IMF took place under the reign of Republican presidents?
I haven't looked at the number, but I can tell you Republican and Democratic administrations alike since World War II have made all the arguments that I'm making here today.
On page 11 of your statement that you submitted, we have an indication that every living Treasury Secretary from James Baker on has gone on record urging us to support the IMF. Is this still a true statement?
Yeah, I can't speak for each of them individually. If it was in my statement, I assume I checked it at the time. So I always like to give people a chance to speak for themselves.
I understand. And finally this, is there a way for us to separate ourselves from the world economy and in so doing not have the ability to engage in diplomacy by way of utilizing our economic prowess? By participating with the IMF, this is a means by which we can use diplomacy as the first option. Can you just comment on how we have the benefit of diplomacy as a first option?
You know, I think that the United States leads by example. Everyone would love to have our economic system, and for all of our challenges, our political system. I mean, we're the strongest, most stable country in the world. Everyone in the world looks to us as being the measure of strength. In an international financial context, the IMF is a place where we have an outsized voice because of that and because we've kept our commitments. And the reason I have such a passion for us ratifying the 2010 reforms is it would just be a terrible disservice to the U.S. and to our role in the world for that to erode at all.
If we didn't have the IMF, would you recommend that we create one?
Well, there's nothing else that does what the IMF does.
Thank you.
Time of the gentleman has expired. The chair now recognizes the gentleman from South Carolina, Mr. Mulvaney, for 5 minutes.
Thank you, Mr.
Who will be
Chairman.
our last questioner.
Thank you, Mr. Secretary. Secretary Lew, you are statutorily required to make this presentation, aren't you?
Yes, this is a statutorily required.
I understand that you have decided that you're only going to make yourself available for 2 hours, which I think expires here in the next couple of minutes. What is the statutory authority, sir, for you to limit your testimony to 2 hours?
Congressman, it was an agreement we reached.
Do you have any statutory authority to unilaterally limit
I believe the
amount of your
statute
time?
just requires a hearing.
I'm sorry?
I believe the statute just requires a hearing.
So you don't have any statutory authority to say you're going to be present for a certain number
I've
of
tried
hours?
to make myself available on any number of occasions to the committee. This is the third time I've had this hearing, and I've had other.
There's 20 members of this committee that won't get a chance to talk to you today. That represents roughly 14 million people. Would you be willing to stay for an extra hour?
Congressman, we will work with the chairman on when I next.
I understand you've been working with the chairman since January 14th of this year to try and set up this meeting. We've also understand we've been trying to work with you for a meeting next month. Will you appear before this committee in May, sir?
This is May.
Excuse me, in June for the FSOC hearing?
Congressman, I'm going to leave that to be worked out between the committee and my staff.
Have you instructed your staff to make yourself available for a hearing before this committee in June of this year?
I'm sitting here because I committed to this hearing, and I've told the chairman I will work on trying to arrange.
Will you commit to a hearing before this committee regarding FSOC in June?
Congressman, I will work out a date that works for both.
I'll take that as a no. I want to follow up on
a date that works for both of us.
I want to follow up on Mr. McHenry's questioning regarding the letter that you sent last night regarding prioritization of payments. And I think you said to him that while it was technologically possible to prioritize payments, that it would still constitute default because Social Security checks wouldn't go out, contracts wouldn't be fulfilled, et cetera. Is that an accurate representation of your testimony to Mr. McHenry?
It's close.
That's fine. How do you define default?
I think when the government of the United States fails to meet its obligations, it is in default of whatever obligation it has failed to meet.
So to you, it means more than just not paying principal or interest on debt?
Correct.
And it's your understanding then, based on your letter of last night, that if the Treasury has sufficient funds, it will be able to make principal and interest payments on debt?
No, all I said last night is that a check writing system could work. It's not my decision to choose what to pay and what
No, that's not what you said last night. You said that the New York Fed systems would be technologically capable of continuing to make principal and interest payments.
Technologically capable.
While Treasury was not making other kinds of payments. And my question to you is, if the Treasury is making payments on principal and interest, but not making other payments, is that default in your mind?
Well, Congressman, first of all, you did not accurately restate my letter because it does not
Actually, I read it word for word.
But you're leaving out the word technologically capable. It does not say that the payments will be made. It's not my decision. Only the President of the United States can decide whether or not to do that. And
Did you tell anybody outside of Treasury?
By the President of either party.
Did you tell anyone outside of Treasury? Did you tell anyone who owns any debt to the United States of America that their principal and interest payments could technologically be paid? Capable to be paid in the event the debt ceiling was not raised?
The question that I was asked and answered on many occasions was, has a decision been made? And I answered no.
The question you're being asked now, sir, is did you tell anybody else on Wall Street, anybody who owns any debt, that they were capable of being paid in the event the debt ceiling did not get raised?
Yeah. I can't speak for all conversations that might have happened. I'm not aware of any conversation.
I'm not asking you about all conversations. I'm asking about your conversation.
I'm not aware of any conversation.
Did you ever tell Morgan Stanley they were going to get paid? Did you ever tell Bank of America they were going to get paid?
I have no recollection of any conversation that I had with any party.
Do you have any recollection of having any conversation with any Wall Street firms regarding prioritization of payments?
Look, I had many conversations where people asked what the decision was, and I've said to them what
I'm not asking you about the decision. I'm asking you about the capability. The letter last night said it was technologically capable of making the payments. Who else knew that?
Yeah. Congressman,
when did you know that they were technologically capable of making the payments?
The question of whether or not we make payments
I'm not asking that.
is the
Ms.
issue.
Liu, when
Because if we
did
don't
you
make
know?
payments,
When did you know the payments could be made?
Congressman, I'd have to check. I don't recall the date. But the issue is, and I don't know why anyone would want to be in a place where the United States.
But that's not my question,
is in
sir. My
default.
question
I
to
don't
you is not
understand
why
that.
we would want to know. The question is, why did your testimony change?
My
And who
testimony
else
did
did
not
you tell?
change.
Who were you telling
Congressman, my
back in
testimony did not
October
change.
that they were going to be paid when you were on national television telling people we were going to default? That's my question.
Because you asked me my definition of default, it's the same today as it was then. If the United
So if we
States
ask
of
you on
America
television
fails
next
to pay its
time
bills,
if debt
no
holders
Congress
will
has
be
ever
paid,
put
you
the
will say
United
yes.
States in a position where it couldn't pay its bills, and no
But
Congress.
next
ever
time
showed.
the debt ceiling becomes an issue and people ask you, will debt holders be paid, you will say yes?
My time is out.
Thank you, Mr. Chairman.
Without objection, all members will have 5 legislative days within which to submit additional written questions for the witness to the chair, which will be forwarded to the secretary. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for the inclusion in the record. This hearing stands adjourned.